Contrarians, welcome back to the Encrypted Capital Recap for Thursday, March 10th. First off, it's been almost a month since our last video. Felt it was time to come back and say what's up and update you guys on what's going on in the world, since it's basically gone to hell in a handbasket since the last time we spoke. Basically got war breaking out everywhere, inflation's going crazy, gas is astronomical, and here we are looking at Bitcoin sitting at about 39,000 bucks. It's been extremely volatile the last, well, it's always been volatile, but especially even in the last, 24 hours or so. Crazy whipsaw action going here, basically taking out all the longs here, coming back down to wipe out the shorts, and now we're kind of just figuring out, what's going to be the bias in the market. We did have U.S. inflation data just come out here. This morning, U.S. inflation rises to 7.9% in February, a fresh 4-decade high. One thing to note here is the fact that this is just in February, right? This is not counting like post-war, because this happened, February 27th or 28th, I believe, when the invasion took place. And so what do you think that number is really going to be come April, because we're basically about a month behind. So keep that in mind when you guys are looking at this data. I don't know if Biden's trying to pull a fast one on everybody or what, but, we are a month behind. So definitely something to take note of here. It says Bitcoin is seen by some investors as a hedge against rising prices or dollar devaluation. Was little changed after the CPI report. So that's the Consumer Price Index, which closely matched economists' expectations. So, like I said, what's it going to be come April? We're going to get absolutely smashed. And, the anticipation of inflation, the fact that inflation is coming, that's when we saw Bitcoin really make its run up. It wasn't necessarily when inflation was here. It was the anticipation of inflation. I know that Blockchain Backer has talked about that a little bit. So we got inflation going crazy, and that's just the tip of the iceberg, because wait till April. We also had yesterday, Biden, everybody I'm sure saw this news, but Biden put out the executive order on cryptocurrencies. And we did get a spike up here afterwards because some of Yellen's comments got leaked the day before. But one thing that I wasn't too sure of was there wasn't a crazy amount of volume come in when that leak did happen. So yeah, the price pushed up, but I kind of wrong-footed everybody, because now, you basically erased all those gains that we got from the last, day or so. And basically goes on to say that, he signed the executive order on Wednesday, calling the government to examine the risk and benefits of cryptocurrencies. And the market did take that positively. And it said that they were focusing on 6 key areas: consumer protection, financial stability, illicit activity, U.S. competitiveness, and financial inclusion and responsible innovation. And it said that they also want to explore the version of the digital dollar, because China's doing it, right? So China's got their own digital dollar going on, their digital yuan, and they've been ahead of the curve for quite a while. So I think the market did react positively, because it looked like the U.S. is trying to keep up and not get left behind. But, like I said, all those gains basically just got erased here. And we'll scroll down here a little bit. And, we talked about the 6 key areas and, the threat of cyber attacks and losing huge sums of money, right? They're trying to supposedly protect the investors. But, the SEC is supposed to protect investors. And look what they did at XRP. They basically demolished everybody's returns just overnight and then dropped the mic and left. I'm talking about Jay Clayton, who coincidentally enough is an advisor for Fireblocks, which is a custody solution that we're looking into. They have providing custody solutions for Galaxy Digital, which is obviously one of the bigger funds in the space. And so you have Jay Clayton over there being an advisor of Fireblocks, a custody solution for digital assets. Really makes me question the motives here when I see guys that were from the SEC that are going after companies like Ripple, and they go ahead and cross over to the digital asset space. Pretty interesting. So what else do I got here for you guys? This was the, touching on Biden's executive order, right? So this is another article that kind of goes into the highest urgency on CBD research and development. And I highlighted a couple things here, and basically stated here that there's several organizations that are already researching and piloting CBDCs in the United States. And that's the Boston Fed, which is partnered with MIT, right? So We know that MIT, you had that gentleman, Silvio McCallie, who was doing a bunch of stuff over at MIT. He was teaching classes, and I believe he was developing other blockchain technologies, and actually ended up winning an award over there around the same time, an award for blockchain technology around the same time that Gensler was there, who obviously, is the head of the SEC now. And so, you kind of start tying all these things together with MIT, central bank digital currencies, USD Coin, Algorand, all those companies and people are tied together. And so it's not really surprising to me at all that you got MIT kind of spearheading the CBD technology and the digital dollar project. And so, I think that this has kind of been around this has been in plan for, or not in plan, but this has been in the works for quite a while. This has been the plan for quite a while, blockchain technology being utilized to basically create a digital dollar, in my opinion. And I was even talking with one of my other hedge fund guys just the other day, and they're basically saying how Galaxy Digital is basically Goldman Sachs now, because you have so many people that used to work at Goldman Sachs now that are working for Galaxy. It's pretty mind-boggling. I think everybody kind of knows that this is where everything is heading. This is where everything is going. And if you have patience in these markets to let these things play out, you can make an absolute killing, which is why, just going back to the charts over here, looking at how everybody's getting whipsawed back and forth. We're not day traders at all by any means. We are basically acquirers, we're holders, and we're rebalancers when we start to get too far weighted in other assets. And so if you guys are interested and you guys want to go ahead and sign up for our newsletter, you guys can do so. All you have to do is go ahead and click the link in the description below. We have a free version and a paid version. We're very active. We kind of go over daily brief where we'll give you guys the top headlines. This is all free. Top headlines, we'll give you the top 3 performers for the day, as well as like our market outlook and overall sentiment. So this is what we just released the other day. This was talking about Yellen's comments. So you guys can see what we're talking about here. The top performers, this was for yesterday, as well as, the market outlook and our take on it. So if you guys want to sign up, you guys can get that for free delivered to your email box. We do that several times a week. And then you guys will also get market updates as well. We kind of go back and forth with including market updates for our free version and our paid version. The paid members will get our trade updates, rebalancing, exit strategies, and all that good stuff. So definitely something that you guys might be interested in if you want to support the channel. It's a great way to do so. So you guys can go ahead and check that out here. And let's get back to the news here. So as we discussed, Bitcoin drops below 40K, wiping out the gains from Biden's crypto executive order. And so, basically jumped 8. And then the initial excitement kind of faded, especially with that CPI data, because it was basically on point with what they thought inflation was going to be. But like I said, don't be fooled with those numbers. This came out from Cointelegraph. It says CBDCs will not impact private stablecoin market, says Tether CTO. So there's a lot of talk about CBDCs and if, stablecoins were still going to be in play, if they were going to survive, if there was going to have any effect on them whatsoever. And so the gentleman that started USD Tether, Paolo Arduino, I'm totally saying that wrong, don't really care though, but he's the CTO over at Tether, and he believes that the growing developments around central bank digital currencies globally wouldn't really impact the role of private stablecoins. He also went on to explain that it's not about digitizing the fiat currency as it has already been done. So yeah, obviously everything's basically ones and zeros on a screen now. He says, given most modern day transactions are digital, the main goal of CBDCs is to use private blockchains as a modern and cost controlled tech infrastructure where most of the bank transfers and credit debit card transactions will be settled via CBDCs. I do tend to agree with him on that, since we kind of know what's happening with the core blockchain and the chosen assets, XRP, XLM, Algo, I believe IOTA is included in there. So you have all of these CBDCs and other cryptocurrencies that will be used as liquidity providers and smart contract settlement assets. And so and XDC is one of those for the smart contract settlement asset, as well as probably a liquidity provider too. But so you have all those kind of working in favor of, the central bank digital currencies and basically how this new financial system is going to be built. And so I thought it was interesting that, the gentleman who created Tether was coming out saying this. But do keep in mind that Tether was accused of not having like a one-to-one backing of USD Tether to the actual dollars and assets that they had, to basically provide and basically show that they actually had assets to provide the one-to-one backing. There has been some, what's the word I'm looking for? Discrepancies in what they actually have. And while nothing has come of it yet, they did provide the necessary documentation to show that they did have a one-to-one backing, but they did get fined, if I recall correctly, because there was a period of time where they did not have a one-to-one backing. And so, this is kind of where I like to go over to USDC, because that it's basically ran by Circle and Coinbase, USDC, and that's the Center Consortium. That's their partnership together. So the Center Consortium, Coinbase and Circle, they created USD Coin. And you had Goldman Sachs, initially funded them $50 million back in 2015 or 2016, I believe. And Circle also owns Poloniex, which is another crypto exchange. So you have all these guys kind of working in tandem behind the scenes. If you don't dive into it, most people might not be aware of all that. But I would tend to think that USD Coin would be a safe haven for holding your dollars in a stable coin versus maybe a USDT, given that they did have some heat brought on them. But that's your own decision to make. And I do know that Binance also has their own USD, Binance USD. That might be something that you might want to hold if you're unsure of either USDC or USDT. But obviously up to you guys, do your own research, but definitely something to consider. And also going to bring it back here. I don't know how many of you guys remember Limewire. Probably dating myself here. But Limewire is making a comeback after a decade with an NFT marketplace. So Limewire used to be the place where you download all your illegal music, and you had a super shitty, slow cable modem, or what was it, like a T3 or a T1 line back in the day, if you guys even remember that stuff. It basically came out around the same time as Napster, and Kazaa was also another one that we used. Well, now these guys are coming back, and they're trying to make things right with the NFT marketplace and promises to give music artists freedom over their content. Basically says that Limewire is returning as a platform for artists, not against them. On Limewire, the majority of the revenue will go directly to the artists, and they'll be working with the creators to allow full flexibility, ownership, and control when it comes to their content. So that's kind of interesting that Limewire is making a comeback, because they basically paid $105 million as a penalty to record labels for copyright infringement back in May of 2011. So kind of starting to see some of these old companies come back, almost similar to like a GameStop or a AMC. These guys coming out from the depths of their demise, and now making a comeback here with NFTs. So pretty interesting. I still am not completely 100% sold on NFTs. I don't know how you can really value some of these like ape artworks. It just makes zero sense to me. I mean, you really have to have some sort of perk or a dividend attached to these NFTs. There has to be something that you get in return other than just a digital piece of artwork. Like I said, I do like it for the real estate aspect of it, of tokenizing a building and selling that on the blockchain. I think that's great and fantastic. But when it comes to selling these Bored Apes for $1 million, I mean, what are you really getting there? So I tend to think that this is like the ICO craze of 2017 into 2018, where a lot of people are going to end up getting wrecked. And in my opinion, you're probably going to want to stick with some of these ISO coins, as well as coins that have real utility, and not some Bored Ape bullshit picture. But that's just me. So I'm going to round it up here. Let's see, last but not least, we got crypto giant Coinbase says it's adding 3 experimental altcoins to retail trading platform. And I was reading this, and I thought this was kind of weird, because they're basically giving the experimental asset label to currencies that are going to be having more volatility than their standard basket of assets. But I mean, that doesn't make much sense to me, because all of these cryptos have roughly the same volatility anyways. It doesn't really matter what it is, even if it is a low market cap coin. I mean, the swings are pretty similar. I mean, if Bitcoin drops 10%, alts are dropping 15 to 20%. That's pretty standard. So they go into Ergo, Eternity Chain, and Status Network, which I did see rally. That was on our list that we were taking a look at that. But this experimental label, I don't know. It says to be transparent and help customers make informed decisions. We've added an experimental asset label to the product detail page of certain tradable assets that are either new to our platform or have relatively low trading volume compared to our broader crypto marketplace. So beware. I wouldn't be anxious to jump on any of these particular assets, but Coinbase does generally tend to have a good effect on new assets. You can call it the Coinbase effect, but some people can get wrong-footed. So I definitely would not invest any money in these unless you're willing to lose it all, as with basically just about any crypto asset for that point. So that being said, we're going to wrap it up for this edition of the Encrypted Capital Recap. Good to be back. If you guys want to support the channel, you guys can do so by signing up for the newsletter. We'll catch you guys all in the next video.